S&P 500 Index Analysis, Inflation and Market Outlook. Over the next few minutes, we will analyze the recent performance of the S&P 500 Index, SPX, and discuss the impact of inflation on the market. We will also provide insights into the current sentiment among individual investors and highlight key economic reports released during the week. Based on our analysis, we maintain a bullish position on the SPX and recommend the Rydex Nova S&P 500 Fund, RYNVX, or other bullish S&P 500 index funds or ETFs for aggressive traders. Last week's analysis. Last week, investors pushed stock prices higher with hopes of rate cuts starting in June. Federal Reserve Chairman Powell's statement of 3 rate cuts this year further fueled optimism. The NYSE Advance-Decline Line and breadth supported the rally, indicating a positive market sentiment. The Conservative S&P 500 strategy, which focuses on long-term chart analysis, remained bullish and did not make changes based on emotions or news events. Current analysis. Inflation has become a key concern for investors. As long as investors believe that the Federal Reserve will start lowering rates in the coming months, the odds favor higher highs for the market. The Invesco S&P 500 Equal Weight, RSP, stock index hit new highs, indicating strong breadth and supporting the continuation of the rally. However, Federal Reserve Governor Chris Waller's comments about holding the current restrictive stance on interest rates due to high inflation readings and strong job gains may impact future rate cuts. There is a significant divergence between small-cap stocks and large-cap stocks. While big-cap stocks continue to advance, small-cap stocks have shown limited growth over the past 2 years. This divergence challenges the notion that bull markets tend to struggle without the participation of small-cap stocks. However, we will follow the current trend and monitor market performance accordingly. The SPX has shown a strong first quarter performance, with a 9.9% increase in 2024. A strong first quarter often precedes a strong full-year performance. However, gold's record high and its historical role as a hedge against inflation suggest that market participants may doubt the Fed's ability to control inflation through future rate cuts. The possibility of continued inflation could impact the stock market. The country's debt burden is another concern. The Congressional Budget Office predicts that debt held by the public will reach its highest level ever in 2029, at 107% of the economy. By 2054, it is projected to reach 166% of the economy. This analysis raises questions about the sustainability of the debt and its potential impact on the market. Conclusion. Based on our analysis, we maintain a bullish position on the SPX. The market is supported by positive breadth and the expectation of rate cuts in the future. However, concerns about inflation, the divergence between small-cap and large-cap stocks, and the country's debt burden should be monitored closely. Aggressive traders are recommended to consider the Rydex Nova S&P 500 Fund, RYNVX, or other bullish S&P 500 index funds or ETFs for their investment strategy.
As always, do not forget to like and subscribe to our channel, All Things Money, to see more content like this.